What the heck happened to the department stores? We're in prime shopping season right now, the period between Thanksgiving and the New Year, yet these quintessentially American retailers have never felt more irrelevant. It's not an easy answer. It's because, well, look, the department stores, they're kind of like an Anna Karenina problem. Remember, as in happy families are all alike, every unhappy family is unhappy in its own way. That's some sage stock-picking advice from Leo Tolstoy. In retail, happy families like Walmart, Target, and Costco are feeling pretty similar. But the losers, like Macy's and Kohl's, have lots of uniquely self-inflicted wounds. Of course, they've also got bigger problems like Amazon. You can't blame the department stores for the retail Death Star. It's not their fault. Amazon's got incredibly low prices combined with unbelievable convenience. With that kind of competition, brick-and-mortar retailers need something special to lure customers into their stores. Unfortunately, none of the traditional department store chains has been able to do that. We know it's possible because Walmart and Target have kept Amazon at bay by aggressively expanding their digital capabilities. Macy's, Kohl's, and yes, Nordstrom, with that legendary service, they haven't been able to do that. They don't have the lowest prices, and they don't have a great online experience. They just don't. Second major problem, over the last few years, it's become much easier to return clothes that you buy over the web. People would much rather try this stuff on at home than in the store. I've been querying people on Twitter all weekend about their experience returning Amazon goods at Kohl's. It's a popular new initiative. But it almost seems like the final Trojan horse wheeled into the department store. While some respondents ended up making impulse purchases at Kohl's with their discounts, Amazon still feels to me like the real winner because it's giving you yet another reason to just order direct from the website. Third issue, Wall Street enticed many of these department stores to do the wrong thing with their balance sheets. Macy's has bought back nearly 100 million shares over the past 7 years, yet its market cap has shrunk during that period from roughly $15 billion to $4.6 billion. They even borrowed money to fund the buyback, and that's almost always a terrible idea. Over that same period, Kohl's has shrunk its share count from 235 million to 157 million in 7 years. But its market cap has gone from roughly 10 billion to 7.3 billion. Just like Macy's, they took on a big slug of debt in part to pay for this. They'd have been better off if they just sat on that money. They'd be much better off if they spent it on building out their online capabilities. 4, the collapse of the malls absolutely crushed Macy's. Most malls are run by real estate investment trusts these days that want to raise rents every year to please their investors, sometimes more than the shoppers or tenants themselves. And unfortunately, the structure of the mall is just plain wrong for today's shopper. Malls seem to work only for higher-end specialty stores like a Lululemon, which reports this week, and I am expecting a good number. The shopping center format has more going for it, but department stores are still stuck in the mall, and it's just not working. 5, now these troubled retailers can't afford to offer the same level of customer service they used to. Sometimes they have long lines, sloppy aisles, empty registers. These are all common complaints about most of the mall-based department stores that I read online. They can't afford to be run efficiently. The final cause of death, well, you know what it is? It's the cell phone. Yep, our cell phones get better and better every year. It's gotten to the point where you're already carrying a one-stop mall in your pocket everywhere you go, particularly for the millennials. Whoever was the lowest price wins in the handheld mall, right? As long as they've got a quality delivery service. The problem for Macy's and Kohl's and Nordstrom is that all these trends are accelerating, meaning their position gets worse and worse with every passing year. Perhaps even a miracle on 34th Street might not be enough to turn this industry around. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.